Hello and welcome back to Dukascopy TV. Now, amidst US data out today, I thought we'd update you on what's happening on the other side of the world in Australia. In the last 12 hours or so, there have been warnings about Hurricane Rusty and whether it's going to affect the country's lucrative iron ore exports. And then there's still a big question mark over the health of the economy. But what about the Aussie dollar? How has it been traded of late and what's the outlook? Well, joining me on the line from Sydney, Australia is David Campbell from Hunter Burton Capital. Now, I've been told the Australian dollar is decorrelating from the risk trade and recorrelating with rates, but it's going very slowly downwards. Has this been the biggest issue for you today when looking at the Australian dollar?
I think probably just if we focus on today's trading, I think more the market has been focusing on some quite significant flows out of North America overnight. There seems to be some divesting of Australian dollars out of the hedge fund community in that part of the world. And also there was a bit of a shock first thing in the morning when a headline came across from S&P just highlighting the potential downside risks to Australia's credit rating if certain factors come into play. Although they said there's reasons to believe they'll be mitigated, it did just shake up the market a little bit. Now, going forward, I would expect that the rate issue would come into play, but just for today, the market was more focused on the flows going through the market, and they were more heavily weighted towards the downside. And I think there's a realisation coming into the market that maybe the Australian dollar has probably had its day or had its better days. I'm in no way anticipating one of the classic Australian dollar collapses, but I think for the sort of short to medium term, the market's taking a realisation that we're running out of positive factors. Yeah, definitely from the point of view, we're not really expecting any great spike up in rates. The US, whilst they're maintaining their easy rate policy, I mean, clearly the risk is always there for their rates to tend up rather than down. And I just think that the market, looking at various factors, for example, from China, the iron ore projections out of UBS today about halving in value, all these factors compound to just make people realise it's probably that trade's run its course.
Now, just how much are problems in Europe affecting the Aussie dollar at the moment, such as the Italian elections, for instance? I
don't personally believe that that's a big factor in play for the Australian dollar at the moment. I suppose at a stretch you could put that in the risk-off category. But as we just said, it's just that sort of domestic situation, more in probably in Asia, an Asian focus rather than a European focus.
What do you expect to see coming out of the Reserve Bank of Australia in the coming months?
The RBA, well, obviously they're always a factor. The RBA seems reasonably comfortable with its current stance. Numbers like today, the construction index today was down 0.1%. It was expected to be up. I mean, the RBA obviously would be getting frustrated. They're not getting any traction with recent rate cuts. But I think they're probably comfortable. They don't strike me as being a factor going forward in the short to medium term. Probably more the RBA is a factor in just some comments here and there. I mean, we had some comments yesterday from Guy DeBell that, suggest to me that they're a bit more focused on the currency than they have been for a while.
What are your predictions on how the Australian dollar will perform going forward?
It's been trading quite well for a long time now in a 101 to 106-ish band. And actually you spent a lot of the time towards the upper end of the band, and there was a lot of excitement that we were going to break up and test, 120, etc. We seem to now be settling more into the lower end of that band. And currently it's trading below 102, and I think it's starting to expose that weaker underside. Now, there's a continual demand coming out of the export sector in Australia that's always looking to buy the dips. That tends to pull out when we get more of a pressure on one side. And I think given those factors, I'd be looking more shifting that range now from 101 to 106 down to 98 to 103. Probably the more joy in the short term is in the downside push rather than upside.
Finally, David, I just want to pick up on something you mentioned earlier. You said the Australian dollar has had its day. What do you mean by this exactly?
Well, we all have our day. I suppose it was a trade of 2012, and I think that the market is now looking for probably easier trades. Obviously, they're very much in love with the concept of a big move down in the yen. that's probably attracting more leverage to that market. As far as Australia is concerned, we've had a lot of investment here from central banks around the world. A lot of that rebalancing has probably occurred. Obviously, there's bits and pieces that occur from time to time, but the majority of that's probably been done, and I think that it's just exposing the downside.
Okay, thanks for joining me today. That's all we've got time for right now. I'll see you again tomorrow in our Commodities Corner, but for now, goodbye.